What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. Welcome to our another installation of market analysis, our live review sessions where we break down these charts and we show you everything in the market that's hot right now and all the levels that you need to know and trade from so that you can make some good profits. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures, and of course, I'm here with my guy.
You already know who it is. It's your boy, I'm the D guy, aka Pro Financial. Man, I hope you guys are ready for tonight. We're gonna have a great show. Matter of fact, an amazing show. So make sure you guys have your notebooks and your pens out so you guys can jot down the levels. Cause tomorrow, non-farm payroll, we gonna be live. So let's get started.
All right. So with that being said, today we want to go over a few things that we've already kind of touched on before. We want to give you a follow up analysis. So we want to talk about a couple of currencies, a few equity indexes, and we also want to introduce. Of course, we have our new segment. We want to introduce something new to you guys today that you'll definitely find interesting. So make sure you stick around for that too.
Mhm.
All right. So with that being said, let's go ahead and get straight into this analysis. Now, let's start with our favorite pair, the one that we love, the one that we adore, the one that never lets us down. And also, I got to add the pair that Darren drew a trend line on that actually helped me make a profitable trade yesterday. So we'll get into that a little bit too.
Yeah.
So let me see. Hold on. Let me bring my notes up, you guys. But basically, I was telling you guys on Tuesday about all the volatility that we were seeing with US 30, which has continued throughout these past couple of days since the last time that we talked. Because remember on Tuesday, I was telling you guys about how these candles were really moving up and down in between the zones. So every day, buyers and sellers both had opportunity. Now, as of late, the sellers really hasn't had any chances not to do anything really major because the bulls have taken over and pushed the US 30 out to all-time highs. So before we check out the daily chart, let's first look at the weekly so we can get an understanding of exactly what's happening. Now, of course, as we look at the long-term perspective, we can definitely see that the trend has been on a strong tear since the beginning of March 2020, and that is continuing to be the case. So let's break it back down to the daily chart once more. Now that we understand the overall long-term picture, we understand why we're seeing these movements. Now, remember how we were in this consolidation zone. We bring up my support and resistance. So remember how we were in this little area. Now look at what's happened. Remember how I was telling you guys on Tuesday that usually coming out of a consolidation zone, you usually have some type of bullish momentum like a long tail candle wick that usually leads to the breakout. And that's exactly what happened. We had the long tail candle wick form a few days ago. And then from that point forward, we just been moving higher and higher and higher to new all-time highs. We're about to touch 34,600. So that's very significant. So let's go ahead and break it down to the 4 hours so we can kind of see exactly what we want to get into in terms of trades and see how we can set ourselves up for success for tomorrow's non-farm payroll announcement. So far, one thing that we definitely want to talk about is the fact that whenever markets break out, I know you guys have heard me tell you this a million times before. Here's a million time in one. Always look for the retest. So whenever you're in a consolidation zone like we were just in, whenever prices break out, you want to see prices come back, sit on top of that area, and see that level hold up as support. Now, once you see prices bounce off of those levels continuously, the more times it does it, the better it is for you as well. So whenever you see those things happening, that tells you that the bulls are still in the market. And then all you have to do after that is look for a higher low, and you're pretty much good to go long. So that's what we saw in this general area right here. We saw prices come back down. They tested this area from May 4th at 6 o'clock all the way until May 6th at around 2 o'clock. So you had about a good day and a half to get your orders in and go long from these levels with that in mind. So now that we passed that point, we need to look to the left and look for what the next level could potentially be. So the first thing that pops off to me is when we look to the left, we see this last high that was made at 34,450. Now that right there is a half number level. Half numbers are important because it follows our quarters, halves, and whole number theories. Your half numbers will be your 450s, 550s, 650s. Quarter levels will be 425, 475, and the whole numbers will be 400, 500, 600. Those levels always hold up as we see right here. So let's break it down to the hourly to really understand and see where we want to come back to. So this is the level I was pointing out, 34,450. This is the last high. If this market is healthy, we should see prices come back, test this level, and then see the move higher. But we know that US 30 is a very volatile pair, so we always want to look for our secondary entries. So me personally, I would more so be looking for this area down here at the bodies instead of the wick because I know how US 30 likes to move. So for me, 34,400 would be my price. And since we are at new all-time levels, we need to continue to mark up our chart. So let's go ahead and put our level right here, 34,400. That right there will be the level that I'm looking for. And of course, if you want to be aggressive, you can go for 450. And also, you don't have to just pick one or the other. You could put buy entries at both of these levels, and I wouldn't be mad at you. You could definitely do it that way. But overall, I'm looking for prices to come back down anywhere to these three little levels, and that's where I'm looking to go long from. And in terms of the trade that I was able to take yesterday off of the zone that Darren drew, this one right here, if you guys remember from Tuesday's class, if you haven't seen it, make sure you go back, check that out, because we did lay down some good information. Darren pretty much drew this zone perfectly across these bottom lows. And if we look at what happened yesterday on May 5th, it came back down and it hit this level at 10 o'clock. I was day trading at the time. I saw the level get hit, and I said, if I see a bounce and a higher low, I'm going long. And I was able to go long and take it right back up to the next level up. So shout out to Pearl Financial for putting me on to that. And let's see.
Let's get it. Let's get it.
So yeah, that's my analysis for US 30. I'm overall looking for uptrends. Tomorrow should bring a lot of information, a lot of volatility into the market. A lot of moves will be there that can either benefit you or be to your detriment. So make sure you trade smart, trade wise, and let's pass it over to Darren, and let's see if he can't give us some more great levels so we can take trades from tomorrow.
All right. So with that actually said, go back down to a lower level so I can see that zone. And I want to kind of see what mindset that I have when I put that zone in. It was something about, zoom in a little bit. The other way. Squeeze it a little tighter. What in the world? Okay. So I said for me, what I think what kind of drew me to that section was, I said I was looking at a head and shoulders, I think, pattern or something. I was waiting to happen, how that was the head and that left side was a shoulder. And if we could get the second shoulder to form, which it did exactly to the T, we got what we needed. So, man, that's why I try to tell you, man, formations are some of the greatest tools to have in your toolbox when it's time to trade. Because I promise you, if you just follow textbook every time, I'm not gonna say every time, but about, let's just say 90% of the time, you're gonna get a good trade. So let's go on to the weekly. All right, so like I said, the weekly is just pretty much just to see where. Matter of fact, go to the monthly real quick. I want to see where the moving averages stand. Okay, so pretty much the moving averages all align up, letting us know the bulls are in control. Monthly, drop down to the weekly. Okay, drop down to the daily. So literally by the time I've gotten down to the daily, I've already concluded that buys are what I'm anticipating to get. And I would have to say right now, even though the longer term is for the buy, I would have to kind of go for a sell right now just because we reach overall highs. but I'm only taking it down to the area where the buyers are kind of looking to set up. So drop down to like the 4 hour. I want to take it down to where that wick kind of pops up right next to that big green candle. Yeah, that right there. I want to take it down there and then, ultimately take it for the buyer side. But I feel like since we've reached high areas, I've known with my experience when you see high areas, you don't automatically buy in. You actually have to wait for that sell to occur first before you can take the market up higher. So currently right now, as we're talking right now, I would be looking for a short. But until it comes down to a low enough price, and like I said, buying is ultimately what I want to do. But if I wanted to get capitalize on some pips right now, knowing that the overall trend is up and I'm looking for a buy, I would have to always go back to my key saying: for every good buy, you need a sell to happen. So pretty much what I want to do right now, I want to get some pips right now and get in for the sell, and pretty much hop back in when the market gets to a lower price, take profit, and I'll be setting up for the buys. But I definitely wouldn't be surprised if prices did come down to that area where Tiberius is at right there, but at the top of the wicks. No, come down a little bit. Right, yeah, right there. Because that area right there, now move that price to the right, the other way. No, the other way. I'm sorry. That high lines up with all those lows, and that's a strong area of duality going on, which all some lows are lining up with highs. And like me and Tiberius always tell you, anytime you see the market lining up like that, the duality levels, you can expect the market to do something, whether it's up or down. So you definitely want to be prepared for that. So ultimately, I want to go for long, but I want to hop in for the short to bring it up to long. So short term right now at 9:58, I'll be kind of looking. In fact, drop down to like the 5 minute. At 9:58, I'll be kind of looking for the sell just because prices is looking like it's slow, exhausting for the buys, and it's looking like it's trying to come down to get some more momentum to go back up. So I'll be kind of waiting for the prices around 35, 34, 540, and those highs to be broken with that gap. If I can get that area where the gap lines up, if I get that area to be broken down below, I want to take it back down to those lower areas. But if I cannot get it further, I'll just take profit. And that is actually that area where we at right now is only like 4 or 5 pips from where we at. So go to the 15 minute. How many pips is that from where we at right now to the gap?
It's a
It's
lot.
definitely not a lot, bro. We're on the 5 minute chart, bro. 41.12 of your account, so it's not a lot. Go to your 15. Now, if we go to the 15, what you was gonna say?
Nah, for the Dow Jones, 41 points is a lot.
But it's 41%, not even points.
No, that's 41
Oh,
points.
41 points. Okay, so yeah, if I can get the prices to break that gap in the 20 moving average, I'll be looking to take the short. But obviously, if prices stay above that area, then the buying has happened sooner than I thought it would. And honestly, I don't really see it shooting up from where we are right now. It would be only wise as a business person to try to get prices lower, to hop in to buy lower, because where we are right now, we're sitting at high areas. So you never want to buy at highs. You want to buy low, sell high. So currently right now, I'll be wanting to take the short, and once it comes down to my levels that I want to come to a nice duality at level where highs and lows line up, then that'll be the area I take for the long. So ultimately, long term, I want long. The market is going up. The prices are showing bullish activity. I don't want to confuse anyone that just because it's overall up that I'm going short. It's like, well, how can you go short? But like I said, for any good buy move, you need to sell. So That's my analysis.
All right, so there you go, good people. That right there is US 30, aka the Dow Jones. If you want to trade futures, you can use the ticker symbol YM. You want to trade this as a stock, you can use the ticker symbol DIA. And this should be definitely moving tomorrow. Non-farm payroll numbers 8:30 Eastern Standard Time should be going up or down. So that brings us to the next pair that we have on tap. Now, this one we went over on Tuesday, so I want to come back and just give a little recap to let you guys know exactly what's going on. This right here is good old Dogecoin. So I know you guys have heard about this one. It's one of the cryptocurrencies lately that has definitely been having a very, very, very nice bull run. So if you have been long on this pair, you would definitely be a happy person right now, a happy camper for sure. So we know that, well, if you don't know, last week we went over how far the pullbacks for most cryptocurrencies, at least for Dogecoin and Bitcoin, tend to be. Now, we kind of found that they were around anywhere from between 20 to 25%. So that's the type of pullback you should expect. So let's measure how far this retracement that we're in right now has actually gone. And if we follow it all the way down to its lowest point, 24%. We follow it down to where we're at now, about 20%. So everything is kind of lining up and fitting what the market usually does in terms of pullbacks. So that's a good sign. That's something that I like to see. Now, for me, I'm looking for prices to come back and test this overall level that we see down here, located at 51 cents. Notice how this level has been support multiple times, not only once, not only twice, but 3 to 4 times. So we know that in the short term, this level definitely holds up. Now, we also want to consider our whole number, half number, and quarter level number theories. Because if we look at where the lows for this prices are, the lows are located at 52 cents, only 2 cents away from 50 cents. So if everybody on the chart can see that the support level is at 50, more than likely people, a lot of traders will probably put their orders down there. And all you need is one big sell order to come in to run all of those stops that are in the market. So for me, I want to be conservative and try and get in at the 50 cent level, because that would not only give me a better buying price, but it will also kind of keep me out of all of the mayhem and recklessness that goes on at popular order levels. So that's one thing I definitely want to keep my eyes on, and hopefully you guys can too. So let's break it down to the hourly chart. Now here's what concerns me. We have we do have a pullback, and in this pullback, we are seeing lower lows and lower highs, continuously moving down and moving down and moving down. So, a couple weeks back, when Dogecoin had the bigger crash not too long ago, I told you guys that before you start buying again, you want to see prices bounce off of key support levels, then see a higher low get formed. You want complete confirmation, wait for a higher low and a higher high. Now, me in strong uptrends, I like to just wait for the higher low and then take the trade and take it up to that higher high. But it's up to you how you want to play that move. But overall, you don't want to just go long because prices come back down into this area. That is extremely risky, especially with a pair like Dogecoin, because it could hold up at these support levels, or it could just keep going and pull back even further. Maybe potentially pull back all the way to these levels back down here at 44 cents. So you never want to just go long because prices hit that level. When you see prices hit your level, that's just telling you that you need to keep your eyes open because your move could potentially be setting up. So before you start buying and going crazy for Doge, make sure you see that higher low and then go ahead and take your trade. Now let's move up the move. Let's pull up the moving averages. Yeah, on the 4 hour, 20 is above the 50. Let's see what's going on the daily. Same thing. So on the weekly, I already know for a fact that the 20 is above the 50. So the uptrend is still intact. We just have to sit through this pullback for right now. Make sure that we stay patient. And I think for the most part, going long on Dogecoin could be a good idea as long as you get in for the right prices. Remember, this pair is very volatile, so make sure you see that higher low before you go long. So that right there is pretty much just my follow up on Dogecoin. I know with non-farm payrolls coming out tomorrow, it could definitely affect Dogecoin because if you look at the relationship between Dogecoin, look at the pair. It's Dogecoin USD. So all USD pairs tomorrow will be affected. So if you're trading the non-farm payrolls, this could definitely be a nice setup for you. So we'll see what comes tomorrow morning. But before we do that, we want to get Darren's analysis and see what he thinks about Dogecoin right now.
So for me on Doge, like I said, Doge is a new pair for us, and we don't want to go crazy. But like I said, with any amount of money and any type of attention and push, anything can be as big as the world, you know. So we definitely want to still be kind of cautious because it is still fairly new. So let's just go to the weekly really quick. Now we have to understand we've been in a strong uptrend just because a lot of commotion and hype has been around is the reason why it's been up. But notice how it shot up and it's now pulling back and retracing. Now this could mean one or two things. Either one, the market is pulling back all the way to try to retest the highs that it just broken out of, or this could be a huge sign to let us know that the market is now trying to reverse and come back down to some lower areas where the market has to come back down to. It's just the market. So we definitely want to pay attention to that wick. It's going to be very important for future setups on this pair right here. So let's drop down to the daily. So the daily kind of for me kind of lets me know that the up move is exhausting. It's just been going up for some time now, and it has to, like, for anything that goes up, it must come down. It's like literally like a known rule. Like, so what we're going through right now is the down. So we have to be able to handle this dip, so to say, before we can get momentum or movement back up again. So like I said before, it's possible if it breaks the lows where it's at right now, if it breaks that completely, then we're definitely heading to those wicks over to the left. So that's a big drop from where we were before. I don't even know how much more we have to go. 17% more. And how much has it dropped so far?
20 so far, 25 ish.
22 ish. So 23. So it dropped 23%. It has 17 more to go. In my opinion, I think it kind of has already broken that low where we are right now. But that's just only my thought because it hasn't happened just yet. But drop down to the 4 hour. Just because it's looking really, really strong. And the market is trying to break down below the 20 moving average. So that's always signals to let us know that the bears are stepping in and trying to take over the market. So for me right now, I would kind of have to be patient just because the overall trend is up, but we are expecting a down dip move. So for me, I would have to kind of step to the side on this one and let it set up a little bit more before I decide to hop in for the long. But like I said, I want to try to get in at lower enough prices. So it's at 53 cents right now. Why not try to wait for it to get somewhere in the 40s? So I want to kind of see what it does if it comes down to 40. 40 for me would probably be the ideal area to get into to hop back in for the long. So I'm going to be patient for right now and kind of anticipate it to drop a little bit more. So sellers, this could be a good little setup for you to catch some nice pips on this, or I don't know, however it's calculated. But yeah, I'm gonna have to sit this one out and anticipate the drop a little bit more. So that's my analysis.
All right. So that's Dogecoin and US 30 for you guys. Make sure that you keep your eyes on these pairs, not only tonight, but tomorrow morning before we hop onto our session, so that you can keep your eyes on, fixated really on any new levels that happen to form and new action that we see overnight. So with Dogecoin and USD being covered, that wraps up the two pairs that I wanted to show you guys. And we also have another two pairs that Darren is going to break down. So let's go ahead and pass it over to him, and let's see what we have going on.
Alright, so let me share my screen because I don't think it's shared. Alright, can you guys see my screen?
Yep, we got you.
Alright, so Let me set everything up. Please make the screen big. Alright, can everyone see? Alright, so the first pair that I kind of wanted to go over for tonight is gold. Gold for me is, I have been looking at it, but it's definitely another pair that definitely does good moves. Once you have the setups up pretty nice, it definitely moves correctly. So let's definitely look at this on the highest time frame, and let's kind of make things a little bit bare here. But first, before I do that, let's kind of look at some of the levels that I did draw before to kind of give us a picture of what this could be doing. So ultimately, gold came up and made some high areas, and it looks like the market has come back up to those areas to try to test it. For sure, it's definitely been showing strong momentum down, just because ever since this high that was made, it's just been making lower lows and lower highs. But we still have to understand that the 7 is above the 65, which pretty much means that the bulls are in control. But let's drop down to the weekly. The weekly, the 7 is above the 65 on this one as well, but we still have this lower lows and lower highs thing kind of forming. We came down to a nice duality level, which I kind of put a box here, and it was based off of these wicks over here to the left. These wicks lined up with these lows, so that's pretty much how this box got formed. But as you can see, the market came all the way right down exactly into that box, but had no intentions on coming down and breaking down below this box. It found resistance at this box in the middle, and then started pushing up. So one or two things can either mean right now: either has come down low enough to retrace before continuous movement down, or this down move retracement move is now over. It's found resistance, and now it's going to continue up to do what it wants to do. So like I said, the Bulls are still in control on this one. Still, higher highs and higher lows has ultimately been formed, but lower lows and lower highs recently has been formed. So we can only have to trade what we see pretty much. And then the daily. So the daily is the one where it kind of goes against or contradicts what we've been kind of looking at. But what I want to say, being that the market has just broken above both moving averages and broken a high over to the left, I would have to say that this could be valid of that the buyers are still in control. So I think for me, I would want to see prices come back down to this higher area and pretty much see what it does. So I want to kind of move this area over. Hold on one second. Let me just I gotta take this call. This looks very important. Hold on and hold it down right quick, bro. Let me take this call right quick.
Let's pull up the gold chart. I'm gonna share my screen right here. Let's continue to look at gold.
Yes.
All right. So let's go to the
Alright,
monthly.
I'm back. It was nothing. It was false.
Okay.
It was a false joint. My fault, guys.
Right.
That looked very important. But yeah,
share your screen.
Oh, let me share my screen. My fault, guys. That looked very important. I know it was 10 o'clock at night on a Thursday, but you just never know nowadays. All right, so yeah, even though we've looked like we got this little double bottom, and the daily shows the 7 is below the 65, which contradicts the weekly and the daily, where the market is sitting at right now is very important because it's sitting at a nice little duality level, which means these lows over here is being lined up with the highs over to the left. So let me 000 this. But ultimately, I wanted to kind of capitalize on. So I'm gonna put the box at the top of this wick here. So this is still this candle, but I just wanted the top wick. Actually, it should just be the body for real. Yeah, just the body. So yeah, so I feel like these lows are lined up with these highs. So I ultimately want to see prices come where somewhere down to this area before I see it ultimately going up. So let me drop down to lower prices to a lower time frame. Actually, let me adjust that because I feel like that seems a little off to me, just a little bit. Because I want these. I feel like these highs are not really lining. Like it is lining up, but it's not lining up the way I want it to line up. So I'm gonna put it on the top of this wick instead of the body, just because it lines up a little bit more. So pretty much, this lowest candle, I'm putting the zone at the top on the wick part. And that wick part lines up, that low, excuse me, that high lines up with this high, and et cetera, et cetera. So I want to see prices kind of come down back into this zone and ultimately make its way back up again. So and also too, this is also looks like a nice little flagpole that just formed. So anytime that I see a flagpole with my experience, I know that the market is kind of has to come back down and respect the flag's resistance wherever the flag resistance may be. Flag resistance can either be here at this bottom of this candle or possibly even right here on this 7 moving average. Who knows? But I think that this is a flagpole forming, and I feel like we should be expecting for the flag to form and ultimately starting to make its way up. So I think I'm going to be on the buyers for this one. Um, just because everything kind of lines up as far as the highest time frame. The only thing that doesn't not necessarily line up is the daily, but what just happened just kind of shows the up move could be forming right now. So, and this is actually a nice little consolidation area where this has come all the way up to here, and it hasn't been able to. And actually, it hasn't even been that high. Somewhere like around here. So yeah, ultimately we want to see one the market break out of this little consolidation area it's been in. This could possibly be the flag, but we still have room to come for it to come down here for this to be the flag's resistance. But I think, like I said on the 2 hour, we can either get it to the 7 moving average or just to the bottom of the low of this wick down here. But it wouldn't even be far fetched if the market came all the way back down to where it broken out of originally. So, the market has room to run as far as it going down. It has, 3 areas, either the no, 2 areas, no, 3 areas. The bottom of this wick, this 6-7 moving average. Well, this is kind of the same area, so pretty much see if I can buy like a little box. So yeah, so either move to this box or move to this bottom level. So those are 2 areas I'm kind of looking for it to kind of retrace. So let me see what areas this is. This is 18. Is it really just a single number like that? So 1807 or 1806. And this is 1799. I can't get 18 flat. Yeah, so about 18 flat or 18. Let me go to. Yeah, so these are pretty much my 2 areas I'm expecting it to come down to before it to continue up in this up direction. Ty, what you thinking?
All right. So for gold, gold is a little new to me. So let's pull it out to the monthly chart and let's look at it from a clean perspective. Okay. So wow. So since 2007, gold has been in a pretty strong up move. Now, we did have a little, well, not little, let me not say that, but we had a big bearish run from 2011 really all the way down until it made that low in 2015. Now, ever since we made that bottom at 1100, we've been moving up, making higher highs and higher lows. And we ran all the way up back to those all what used to be all-time highs back from 2011. So that's interesting to me because that right there is market structure, and this is on a monthly chart. Now, prices have come back up into that supply area, and they've reversed back. And if we follow prices from what they've done from 2000, the price 2000, they've been making lower lows and lower highs. So mind you guys, this is a monthly chart, so that kind of piques my interest a little bit. But at the same time, because the trend is so strong, to the upside, you have to also consider the fact that every pullback eventually should be broken and we should see higher prices. Now, all we have to do is wait for the right setups to look for the long trades where we can go long and have a good risk to reward setup and take a trade that we like. So let's break it down to the weekly chart now.
So what time frame? What time frame?
Let's break it down. Let's break it down to the weekly chart.
Weekly. My train went in and out. I don't know if it's mine or yours, but go ahead.
So on the weekly, we're kind of seeing a more detailed version of the monthly. Now, what sticks out to me is that if you look at where we're at 1815 and we follow that over, we can kind of see that we're coming up into what used to be the last low, but we're actually kind of pushing past it a little bit. So depending on how gold closes tomorrow, if we get a close that's above that low, this last low at around 1800, that's a very positive thing for us as bull traders. So overall, I like the possibility of the up move continuing as long as we get past and stay above that 1800 level. So let's pull it out to the daily real quick. So the daily makes me very, well, not very, but a lot more confident in the overall up move because if we look at the bottoms that the chart formed around 1680, we had a nice smooth double bottom formation. Now, anytime you see a double bottom coming off of low level prices that also are major levels of support, if we look to the left, we can see that major level at 1600 all the way from almost April of last year up until July. That consolidation zone hovered right above that level. And for us to be able to see a double bottom form off of that same level, maybe, a year later, that's very significant as well. Now, notice how after we had the double bottom, we made a higher low. And that right there, for future reference, is where you would like to go long whenever you see a double bottom. You want to see the right portion of the double bottom get made, and then you want to see a higher low. Once you see that higher low, that gives you confirmation that the double bottom is playing out and prices should continue moving up. So after you see that first higher low, you then see a new higher high, a new higher low, and we've seen prices break past the consolidation zone that we've been in, which had a low of 1760 and a high of 1800. So that's a good thing. We're about $15 above that level. So that means that the buyers right now have a lot of momentum in the market. Now, with that being said, that kind of gives us a good picture as to what we want to do right now in the moment in terms of taking a trade or not taking a trade. So let's break down to the hour chart and let's bring up our support and resistance levels and let's see exactly where we want to get in. Let's analyze this flag that we were seeing a little bit earlier that Darren showed us. Because like he said, whenever you see flags, that lets you know that the momentum is on one side in the market. Now, you never want to buy at the top of the flag. That's because the up move has already happened. And if you buy it at that price, you'll be buying at higher prices. And remember, when we get into the markets, no matter what type of pair we're trading, we could be trading currency, stocks, futures, forex, or commodities like gold. You never want to buy high. Seldom do you ever want to buy high. You always want to try and buy low and sell high. So in that scenario, you always look for potential support levels that you could get into the market from. Now, we've been talking about that 1800 level for a while, and as you can see, Darren already has a zone drawn up there perfectly fitted. So right there, that's definitely an area that I'm looking for. I think that 1800 level will be a very important number for gold because if it stays above it, I think the uptrend that we're in continues. If it drops down below it, things could get a little shaky, especially if we break past the zone at 1788. Because one thing I know about the markets is that whenever you have a big impulsive move, either to the upside or the downside, you want to pinpoint the price point that that potential well that whatever that move started from. So on this chart, we can see that the up move from the big flagpole that we just observed happened at around 1790. So just in simple terms, as long as prices stay above where the original uptrend, well, the impulsive up leg started from, you're pretty much still good in terms of being a bull in this market. Now, once they break past that level, it's going to be a different ball game, and we'll have to think differently when that situation comes, if it ever does. But because we see the flagpole, we're definitely leaning towards a long trade, just kind of trying to think of where we want to get in. So I'll just go over all the levels that we could potentially get and tell you whether or not they're conservative or aggressive and let you determine as a trader how you want to use that information and fit that and structure that into your own trading plan. So, of course, I would say the most aggressive level would definitely be right now the support at the flag that we see at the top green zone, the smallest green zone at the top of the screen. Right there, if prices come back down to that level once again and bounce off of it, I can't be mad at you for taking a long trade because overall you will be playing the flag. You will be looking for a continuation to the upside. So that's a good thing as well. But I've seen so many scenarios where the flag support makes a support level up there, and then all of a sudden they just break down and they continue moving down to the next lower level. And if you look at this chart, there really isn't anything in between the first support level and the next zone below. It's pretty much just a straight shot back down to those wicks at 1800. So if you get caught up in the buying move at the top of that area, wait, what happened? What happened?
No, I'm just trying to see. Is there anything to the left of it? So there's this is the top of it over here. I think this is the next thing right here. Where it lines up with this low. Yep. Try to get it perfect. I'm gonna let you continue. I didn't mean to interrupt you like that. My fault, bro. I just wanted you to. I wanted to make sure there was nothing in between, so the people were like, no, wait, there is something. All right. So pretty much what I did was I put it over these areas over here where it struggled at before. So let's go back over here where we at now. So you're right. There is nothing between the first one and the second one. You were absolutely right, bro. Continue.
All right. Let's see.
Because you said pretty much
Yeah,
there was no levels between the first top green zone and the bottom one, which you're absolutely right. There is nothing in between here. This line happens underneath the second green zone.
right, right. And in these scenarios, I've seen a lot of times in the market where prices will break past that first initial zone and come all the way back to the second one. And if you do hop in for that aggressive trade right there, that could be a potential consequence that you have to face. So going long at that area, I can't argue against it, but I could definitely tell you that the cons kind of outweigh the pros. So all my traders out there, you got to figure out how that plays into your own scenario and then make your decision for yourself. So if we look at the next level that we want to potentially get in from, I would probably say the 1800 level, right where those wicks are at the top of the zone. I think that right there is the sweet spot because it gives you enough room where you can let the market kind of pull back a little bit because it is a little bit overextended. So that gives you enough room to let it run, and it also gives you enough room to let other people in the market kind of, take a breather because it's like going upstairs or go yeah, it's like going upstairs in real life. If you want to go up 100 flights of stairs, you can't just go the whole 100 all in once. You're gonna have to
Facts.
take a break eventually. Markets move in a very similar fashion. So I would right now probably lean towards that 1800 level. That's the sweet spot. Now, if you want to be super conservative, you could definitely get in at the bottom of the zone where this initial impulse move started from. So remember, that's that 1790, 1788 area that we were talking about earlier. That will probably be a super good risk to reward scenario, but you also have to factor in that you have a lower probability of prices coming all the way back there. So that's kind of the trade offs for all of those entry levels. You get in towards the top, you have a better chance of it going up, also have a bigger chance of it pulling back on you. You get in at the middle spot, you kind of have the best of both worlds. You get in at the lowest point, you get the best risk to reward, but the lowest chances of your orders being hit. So as traders out there, just take that information and figure out how it applies to you and figure out how you want to use that information tomorrow to make some good pips on gold. And for the most part, that wraps up my analysis.
All right, there you go. You got a very, very detailed analysis from my boy. I hope you guys have your pen and pad and jotted some of that information down because I surely did. You know what I mean? We definitely want to keep our eyes peeled for those levels. He definitely gave excellently. So, with that being said, we're going to be patient and wait for the buy to set up. But the one thing I definitely wanted to say before we move on, I feel like if the market did come all the way down here, that's a huge down move. Like that's pretty much a down move done happened before we even wanted up move to even happen. So, you know, our prediction of it going up is definitely could be correct. But if it come down all the way down here, like Tiberius said, it's going to be the most greatest one out of all of them because your risk is low because your reward is going to be much bigger. But I felt like this down move ultimately is a huge down move, and if you did get it up here and it did go in all the way down here, you would definitely got caught on the wrong side of the trade. So definitely don't get caught on the wrong side of the trade. Be patient, let it come to you. You have the levels, so now you just have to be patient. So with that being said, we're going to wait for the up move, and now let's move on to my next pair I'm looking at. I think it was what I say, GJ or AU. It was GJ, right?
Yep, I think it was GJ.
Yeah, because I said AU isn't was it this one? Let me look at AU. I think it might have been AU. This one. So yeah, it was AU I wanted to do. So let's look at this on our monthly. So pretty much with our monthly, we knew that we were at very low areas and that this monthly zone that we have was the strongest one. We was pretty much waiting for it to be broken if we wanted the market to to go up. But like I pointed out before, looking like the market already had trouble entering the zone at this candle here. Once it had this big green candle, the next green candle was a red candle. So this could actually be the formation or of the first lower high and the next lower low. So I think that since we're pushing up, we this could be the next of the lower low and the lower high. But we definitely want to be patient because we're still in the red zone. Let me unhide my moving averages. So the 7 is below the 65 on this one. So the overall time frame of it was of it going down. And just how on the weekly we said that since the 7 was above the 65, we knew that the market could still be in a consolidation phase. And I told you guys we needed to be patient. So with the weekly, we see that the 7 is above the 65. We got this high to be broken. We made this high over here, and we have looks like a complete or could be complete of a head and shoulders which we predicted that was going to happen. We had the shoulder that formed over to the left, and we were pretty much waiting for our shoulder to form on the right. And we were thinking that either one or two things was going to happen, being that this was such a strong candle that the head and shoulders wasn't going to be invalid because it was going to continue to push up. But it looked like it pushed up, but it found some type of support at the top. So since we have that, we found that support at the top, this could be now formating the head and shoulders, which we called earlier this week. So let's drop down to the daily. So the daily is kind of setting up and confirming that, the head and shoulders is in fact forming and happening. Just because we're getting a head and shoulders in just this particular little area where we are here. Let's kind of take this circle away. So we have, let's just kind of move this over. We have the head sitting at the top here. Like this pair is full of head and shoulders. We have this head at the top up here. Pause. We have, come on, man. We have this left shoulder over here that formed this big old wick right here. Let me just straighten up this circle here. This left shoulder forming here, but let me make it a little bit smaller because it's a shoulder and I want it to be a shoulder size. This was a shoulder over here. And now we're just pretty much was waiting for the shoulder to form over on this right side. Let me get this circle right. Forgive me for my circle making skills, guys. I know it sucks. And we have this right shoulder forming here. So if we get this, continue to get this rejection, which we're getting right now, the head and shoulders in fact could be forming. So we want to be patient and wait. And remember, with head and shoulders, we have to wait for that good neckline to be broken. And the neckline is down here at these lows. So we want to be patient and wait for the neckline to be broken. Or if we wanted to kind of get like one of those trades where we capitalized early, we could actually wait for these highs up here to be broken. If we can get these highs up here to be broken, we can just take it back down to the low and just have like a safe trade. Let's see how much pips from the top where we are right now to the bottom is about a good 60 something pips. So I'm pretty sure that could be a nice little safe move, but we have to be patient. The 7 moving average is actually right here in the middle. So if we can get these highs and the 7 moving average to be broken over, I think we can definitely get green lights to go short. So ultimately, we are looking for this head and shoulders to in fact fruition, and we want the down move to continue. So let's drop down to the 2 hour. So this 2 hour could be showing how this wick is forming. So let's be patient on this one. Wait for our levels to be broken. So pretty much for the short, we want to wait for that low to be broken, which was that high. So I like this area at 777 800 flat. If we can get that area to be retouched at the top, I would definitely want it to get it to come down. Even though it's pushing down right now, we can be patient. We want to wait, try to catch it at a higher area before we take it back down again. Let's drop down to the 5 minutes, see how high is high and how low is low. So yeah, we are kind of at a low area, guys. So let's wait for it to come back up and touch one of these moving averages, and I think that we should be able to get a good move to move down. Let's see what area this is right here. Hopefully it's sitting right at a quarter level. 7775. So look at that. Look at that, guys. That quarter level is very, very strong. So if we can get the market to come back up and touch that 7775, I think we can get a nice little short move to happen first, which needs to happen for our ultimate head and shoulders to happen, because it's a down movement. So it's a downtrend. So hold on, let me go to this daily again. Getting a little ahead of myself. So ultimately, we were looking for the complete formation of the head and shoulders, which is the down move. We're waiting for that kind of the neckline to be broken here, and then we were gonna just take it back down to the pretty much the 65 moving averages where these lows are at the bottom, and then from there we would just have to kind of reset and wait for the market to see what it does. So for right now, I'll be looking for a short. So I know I said a lot. Ty, tell me what you're thinking, bro.
All right. So let's stay on the daily chart and let's hide all other things on the chart and let's get it clean. Because with this pair right here, AU, I definitely been looking at the head and shoulders as well, both on the bigger picture and the shorter term picture, because we have a overall bigger mainstream, I would call it, head and shoulders in terms of the entire pattern that we see. And then we also have a smaller mini head and shoulders forming on what the right shoulder already is. So that's a very interesting thing. And that's something that I've actually seen in the market before, where you have one major pattern, and then within that major pattern, you have smaller versions of it, which kind of pretty much tells you that the sellers are definitely looking to make some type of move, and they're setting it up right now. The only thing that concerns me is the fact that the overall uptrend has been so strong and that sellers haven't been able to make their moves yet. Because I know in an uptrend, when you see bearish reversal patterns like a head and shoulder start to form, the quicker the move happens, the better. But the longer it takes, the more likely the buyers will probably step in and say, hey, sellers, we see y'all are struggling to push prices past this neckline. We know you don't really want to do that. So we'll go ahead and take back over and do what we've been doing so far. So in this scenario, that could be a possibility. That's the only thing I really have that concerns me. But on the other hand, I have so many signals pointing to the downside. The first two, of course, I just mentioned the bigger picture head and shoulders, smaller picture head and shoulders on the right shoulder. So let's go ahead and break down to the hourly chart to find some more selling signals that we can see. Actually, let's go to the 4 hour. Get a bigger picture. Let's see. There we go. Yep. All right. So hit the little circle button at the bottom. Appreciate you. And zoom it in a little. I mean, not zoom in, but zoom out. Show more of the chart to the left side. Okay, cool. I wanted to make sure that that head was in the picture. So overall, I remember we were talking about GJ on Tuesday. I told you guys about complex head and shoulders formations. This scenario represents the exact same thing where you have multiple right shoulders, but the overall shoulder level hasn't been broken, so the head and shoulders is still valid. And I think now that we've come up into the right shoulder supply level at 78 cents, and we haven't broken through it, we're actually seeing prices move back down lower. As Darren mentioned before, we're already at the quarter level, 77.75. So if we break past here, we can definitely see prices probably come back down to 76 even. And being the fact that tomorrow the non-farm payroll number comes out, this technical analysis pattern that we're looking at could be a potential setup that's going to be, I guess, the catalyst for it would be the news that comes out. So that's another version of how technical analysis and news can actually, fundamental analysis can actually be merged together because they're not exclusive. One usually leads to the other. Either it's the news that leads to the setup or it's the setup that leads to the news. So we'll see what happens tomorrow. But that wraps up my analysis for AU. I'm really looking for the short move back down to 76 cents.
So there you guys have it, man. Two nice analysis on AU. Like I told you, man, those patterns are so powerful. Once you know them and understand them, it's like it's so hard not to see them anymore. It's like once you're woke, you can't go back to sleep. It's like one of those type of things. So we're pretty much all in for the short. We want to see definitely how it plays out for tomorrow. Non-farm payroll. So yeah, that's pretty much our All in for the short. All in for the short. All right, so we're definitely going to move into our, exploration section, which we still haven't found a name for. We're going to find a name. It's going to be catchy, but for right now, it's called the exploration. We're going to, what we said we're going to do, Home Depot.
Home Depot.
What was the letters for that?
HD.
Um, oh, wait.
Hit enter. It'll pop up.
Okay. So, as you guys know, Home Depot is in fact a stock. You don't not necessarily look at it as like a forex. There's a little bit more work that has to go into analyzing a stock. There's one thing to look at the chart, but there's also some back work you have to do as far as looking at their statements, and that's something I think me and Tiberius want to go over with you tonight. I know one thing I wanted to hit on tonight was the formulas needed for the Home Depot. But before we do that, let's just analyze the chart first. And let's just get that out the way. Excuse me. This is my burping, guys. So what is it? I forgot. What is it called when we just analyze the chart? That's technical.
Yeah.
And what is it when we look at their statements?
That's fundamental.
Fundamental. All right. So we're definitely going to go over the first, well, let's just call it the first step, which is the technical. And we're just pretty much looking at the chart and seeing how it's looking on the chart as far as like higher highs and higher lows and what prices that it's at. So right now we are currently sitting at 337. It looks like we just broken previous highs. We broken highs down here and we broken highs down here. So like we said, we never ever want to just buy in exactly at the highs. We want to kind of wait for it to kind of push back down and retest some areas that are previously broken, and then that will be our green light into hopping in for a buy. But let's just say, the 7 is above the 65. The Bulls are in control. We got highs to be broken. Let's bust down to the weekly. Same kind of story. The 7 is above the 65. Looks like the market kind of plays a little close to the 7. Not so much because I kind of see little gaps and stuff, but for the most part, it definitely plays really close to it. It comes down to the 65 once in a while. It doesn't look like it really, you know, goes too far. It just hovers over it. It hits it. Out of the whole time since it's been alive, it's only probably hit the 60. I mean, the 65. Other than the beginning, because like I feel like the beginning was still new. The 65 was pretty much still kind of new, but once it came into like 2012, it hasn't hit. It's hit the 65 once, two. Wait, one. This is not even considered a hit. Two, three, and that's not even really considered a hit. So 3 times since 2012. So, and it looks like before they look like they used to intertwine. Like the 7 didn't really stay far apart from the 65. So we gotta kind of take that into consideration too. Like something happened to where before the 7 and the 65 used to be best friends, but something happened in their friendship to where like, it's like, yo, I'm hit you up once in a while, see what's good on you, check on you, Merry Christmas, Happy Birthday. But other than that, it looked like they really kind of go in their separate ways. So either one, they're gonna either stay this way, or two, they're gonna find some way back to each other. So let's just go with the story. They're just doing a thing right now. So the 7 is above the 65. Let's drop down to the daily. The daily, we did get some contact. The 7 did come down to the 65, but it came down, which showed us that it was consolidating for a while. It broke the lows. It kind of did like a little fake out because if I was a new trader, I probably thought like, oh, it just broke the lows. We definitely going short. But not knowing that this was just a fake out, came down just a little bit. But if you would have kind of paid attention to this gap over here to the left, this gap over here definitely was filled, but this was an area that the market did struggle for a little bit. And it looked like it came down there exactly to the high, the duality level. And like me and Tiberius always tell you, anytime you see the market where the lows line up for a high, you can expect the market to do something. And what did it do in this case scenario? It had a big exhaustion up. The market broke up over the 7 and the 65. So it went all the way up. And now, the market got some huge I said resistance. Uh, Power move up. It bounced down a little bit, got some bounce off of the 7, and now it's pushing up, and we look like we're in probably uncharted territory. So we got to be cautious of that as well. We're at 337, like I said, so we should be trying to see prices come back down to around 328, 330, somewhere around there, so we can get prices to continue back up again. Um, let's drop down to so pretty much the highest time frames all tell us that the 7 is above the 65. The bulls are in control, and whatever's going on is doing good. So let me just look at this again just to recap. 7 is above the 65. Weekly 7 above the 65. And daily 7 above 65. So now we'll just be dropping down to lower time frames and seeing where we would possibly want to see we would want to get in on the market. So let's look at previous highs that were that were broken. So one of them were area we can kind of look at is like the 335. We want to try to keep it kind of like not like a really a round number, but like a 0, 5, or we want to try to get as close to 325. Let's try to see what is down here. 330. Okay, that's 330, and I bet you this over here is 325. Nope, this gap is 3. Where's 325? So 325 is right here where this gap is, which I didn't even see. So this gap right here probably needs to be filled. So should possibly be looking at 330. Me and high, I don't have any signals, so um, let's kind of put our line or area of interest at 330, where this high lines up with this low. So that's a good duality level. And I would want to say this high, but I just feel like this kind of looks so obvious or even so close that I feel like it just probably blow past it. But let's not rule anything out before anything is kind of said. And the last area, which I feel like will be the most beneficial, which is this high over here that lines up with this low down here. So this is another area that's of my interest. So yeah, these are the kind of the 3 areas I want to and I want to make sure that they're all kind of round numbers. So I want this one to be 330. But 330 looks a little bit too high. So let's bring it back down. What about 325? I think that's a little too low. So I guess yeah, it's definitely gonna have to be around 328, 327. And this one is 3. Can I get no? It's gotta be 332 even. What's the 3? Let me just type that in. And this one, 335. Where's 50? 335.50. And this one, I want to be 328. Look at this one again. 329. No. Help me out, bro. You see me struggling. What's like a good quarter level like? I think probably 328.75. Let me see, 328.
325.
Huh? 325, I think it's a little bit too low. 325 is all the way down here.
Right there at the gap, right?
Yeah, oh yeah. I didn't even. Oh shit. Excuse my language. 325. Yeah, right at the gap. So we have pretty much a few levels. We have 335.50, 332 even, 328.75, and 325. So those are pretty much my areas of interest. Ty, what you thinking over there?
All right. So when it comes to stocks, like we were saying earlier, you can use fundamental and technical analysis to kind of break down exactly what you're looking at. Because I know a lot with day trading in particular, the fundamentals aren't all that important because you're trading on a, hourly, maybe at most daily basis where you might hold your position for a couple days, maybe a couple hours. But when you're trading stocks and investing in stocks, typically investors are looking to hold their trades for the long term. So in the long term, not only do you have to use technical analysis to find good entry points, but you also have to use fundamental analysis to make sure that the uptrend is going to continue. Because that's what determines what the trend is, the fundamentals. So if a company has good numbers, more than likely the chart increases in price. Because think about it. Let me share my screen real quick. So think about it. When people invest in a business, why do they invest in it? They invest in it because that business makes money, they make profits. And as a shareholder, you get a percentage of that profit that they make. So people want to buy companies that have good fundamental analysis. So if you're looking for an uptrend to continue, you need to make sure that your stock has those things. So if we go back and look at Home Depot from a weekly perspective, actually, let's go back to the monthly. Because remember when we were looking at this earlier, Darren was telling you guys how for a while it kind of just played around in a general area. It was between from 2002, it was pretty much between 43 and 24. And it did that from 2002 until 2011. That's when it finally broke out past that 43 level. And from that point forward, we can see how strong that the trend has been. So when it comes to stocks, when you see things like that, anytime you see a major break and a major change in the structure of how a stock is moving, it's for a reason. So we might not have enough time tonight, but I want you guys for a homework assignment to go back and see what was going on for Home Depot in terms of their business, like who was the CEO, what were they doing, that made the company so much better where clearly when we look at the fundamentals, we'll see where the numbers went and we'll see why the chart kind of changed. But go back and see and study from 2011 to see what Home Depot did to cause this type of movement. Because if you can find that out for Home Depot, that might be a similar reason for other companies, and you might be able to hop on and find some of the best investments just by doing a little research. So that's a little nugget that you can use too. And look at how the chart has moved since that time. Crazy move higher. If we measure it from the breakout point in 2011 to where we're at now, the stock has increased by 1,000%. So that means that however much money you had put in there, multiply it by 11. So if you put $10,000 in there, multiply that by 11. You put $1,000 in there, multiply that by 11. That's how much you made. Or you can just do $312 a share times the number of shares you bought. So you find investments like these, it might be able to change your generation if you play it the right way. So in order to find these things, we need to make sure that we are up on game when it comes to these fundamental perspectives about stocks. Because like I said earlier, it's not just technical analysis. The fundamentals matter when it comes to stocks because these are businesses that we're trading. So the first thing I want to show to you guys is the income statement. Now the income statement basically, for the most part, tells you how much a company made, how much they spent, and how much they had at the end of all of that. So in order to figure that out, you do gross profit minus operating expenses, and that gives you your income. And then you subtract everything else that you needed, and that leaves you with your net income, which is what we'll be analyzing today. So we want to look at net income and gross profit. So I'm on marketbeat.com. This is one of my favorite websites. I use it to kind of figure out in a quick manner what the stock has been doing. You can see the income statement, balance sheet, cash flows, earnings per share. So we'll look at those things tonight. So let's start back from 2012 and let's look at this column right here, gross profit. So notice since 2012, let's just have a visual representation. That's what this graph right here represents. Gross profit has been going up. 24,000, 25, 26, 28, 30, 32. And let's go all the way out. So 32, 34, 37, 37, 44. So over time, we can see that Home Depot has definitely been increasing their gross profits. Now, remember how we were talking about what happened in 2012, 2011? That's what happened. The numbers kept going up and kept going up. Every year they were making more money than they were before. So if you're an investor, guess what type of company you're looking for? That right there. And that's what made the stock have such an extreme up move. And if you look at net income, you can pretty much see the same scenario. Every year, Home Depot is making more money, more money, more money, and more money. And that's why the stock price increased so much. So when you understand your fundamentals, you know that, okay, this company is making more money every year. The uptrend is definitely bound to continue. So now I just need to look for pullback points on my chart once I mark it up. And when it comes to those levels, I hop in. And that's how you make money from trading stocks. And with the balance sheet, it's a lot on here, but it's not too much you have to focus on. It's only a few things. You really just need to focus on assets, right? Total assets, total liabilities. As long as you have a significantly higher number of assets than you do liabilities, you're good. Because think about yourself as a person. If you have more debt than you have money, that's not what's up. You always want to have more assets than you do debt. So when you look at your companies, make sure they're in a good financial position. So remember that. Make sure your assets are higher than your liabilities. And lastly, when it comes to fundamentals, you just need to look at the earnings. The earnings per share basically tells you how much, if you take the revenue in general and divide it by the total number of shares that they have, how many shares, how much money did each share make. So on this website, I think it'll go all the way back to like 2012. So all you got to do is just go back, look at the estimate, right? Wall Street has analysts who do this for a living. So they take the average of all the analyst projections, right? Because the analysts think that as a company, this is what y'all should make based on what we see and what we project. Now, if they beat that number, that's a good thing. They come in below it, that's a bad thing. That's all you need to know. So the estimate is what everybody thinks. Reported is what they come out with. So just look at their earnings every quarter from 2008, and we'll go all the way to 2021. We're just going to see if it beat it or if it didn't. So this is the estimate on the left, reported on the right. So 2008, yes, no, 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 no. So see, from 2008 until really 2011, things were looking kind of hectic. They didn't beat estimates for a long time. Every time they came in under the number. But look at what happened after 2011, right? They were still kind of struggling. 2012 rolled around. Okay, they finally met expectations. You keep looking at the number. They beat them this year. Yes, they beat it this year. This year, yes, 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 yes. And all you got to do is continue to follow it up, and you'll see the same pattern. Every year, as they start making more money, they start beating the estimates and doing better than what was projected. So, if you have a business that's making more money than what you thought they would make, that increases interest in the stock. More people buy it, the prices go up. And you can use all of those things to help you determine what stocks are good. So if you want to be successful in the stock market, all you have to do, find companies with good fundamentals. Because if you find a company with good fundamentals, 9 times out of 10, when you look at the chart, it'll be a very nice uptrend and a very good opportunity for you to make a decent investment and get some bread from it and make some money. So combine technical analysis and fundamental, and you should be very good when it comes to trading stocks and investing within the stock market.
All right. With that said, I definitely want to piggyback right off of that, and want you guys to know, you literally look at those financial statements and literally plug them into formulas. And let me share my screen. And pretty much there's literally 6 uh formulas that you need to use to really determine how well the company is doing. And literally I'm gonna just pull it up. There's literally 6 financial formulas you need to pretty much know. I'm only going to go over 3, which I think are kind of like the most important. One, I think the most important is the quick ratio. The quick ratio pretty much says how quick can they turn their assets into cash. That is really important because when it's crunch time, and they owe some money, and Sam wants his money knocking at the door, how quickly can they turn their assets into cash? That is really important. I think the higher the number there it is, it's good, and the lower the number, it means it's slower. So you definitely want to pay attention to that. And I think the next one you want to pay attention to is the return on equity. Is uh pretty much how profitable their capital is. Let me just make sure that is correct. ROE is number 6. So yeah, common shareholders want to know how profitable their capital is in the business in that they invest. Return on equity is calculated by taking the firm's net earnings. So you literally go take the numbers off those statements that we pointed out, and you plug it into this formula. Let me see. Let's know profitable. Take the I guess the higher the ROE, the better the company is at generating profit. So that is very important when you want to know, when you have money invested, you want to see how can you get your money back that you invested. That's the whole important thing. And I think another important ratio that I think you need to cover is, all of them are very important, but definitely this one's earning per share, which Tiberius was talking about. Which one is that one? Earning per share is number 2. Earnings per share is pretty much has to do with the when you're buying the stock. When buying a stock, you participate in the future earnings, risk of loss of the company. The earnings per share measures the net income earned on each share of the company common stock. The company's analysts divide its net income by the weighted average number of common shares outstanding. So, however many shares they have out there for people to buy, they divide it by the one price of the stock. If the company has a 0 or a negative earnings, then earnings per share will also be negative. So you pretty much is also, you don't want this number to be negative. You always want it to be positive. Obviously, the higher it is, the better it is. So, you take those statements and you have to understand what you're looking at. Like, you can pull out all those statements what you want. those statements circle around these formulas right here. These formulas would turn those statements into something, a whole lot of data, and condensing it down to something more understandable for somebody to read. So all you do if you want to know how much uh, their stocks are worth or how valuable they are, you go to the earnings per share. If you want to see how quickly they can turn their assets into cash when trouble come, you go to that particular ratio, the quick ratio. So definitely, I'm glad we were able to explain that to you guys. It's one thing to trade forex, but when you're trading stock, you definitely want to take all the proper steps. Just how we said for forex, you create a strategy or a plan. This is kind of how what you have to do when you're deciding to trade stock. You do your technical analysis, which you look at the chart, but then you have to get down and bust out some paper and start writing down some ratios and seeing, okay, if I do have my money invested into this company, will it continue to do good? If some of these ratios are negative or bad, that could tell you that if it's up, that it's probably not going to be up for long. Or if it's down and all these numbers are pointing up, could possibly let you know that the company could be turning around and that you could be possibly knowing some information that somebody else doesn't. So, knowing these steps and knowing how to analyze and where to look and how to look at it. So, you pretty much take those statements, balance sheet, income, cash flow statements, and you literally grab the things that they asked you to plug into each one, and that is your analysis for that. So, Tide Bears, you want anything you want to say before we wrap this section up?
Yeah, I think everything that Darren and I just talked about really just highlights the fact, we always tell you guys, you have to put the work in if you want to make it in this game, because you can't just come to the charts and say, you know what, I want to make money today. You have to put the work in. When you're trading, the work is back testing. You got to focus on what you need to. When you're investing in stocks, the work right here are your ratios, like Darren just talked about. You understand these ratios, you have an edge over the majority of people in the market, because you can see things coming before they actually happen. Because guess what? You study the numbers, you know the data. So that right there gives you the edge that you need. And that just really comes back to work. Same thing with all the financial statements. You need to put all of these things together and make sure you own all of your P's and Q's. And if you do that, you have a very good opportunity to make money in the stock market. Because the stock market has been around since forever, and it's been families that have had generations after generations do the same thing over and over. So this is a proven way to actually make money in stocks for the long term perspective.
There you have it, guys. So that is the wrap up of our exploration section. I hope you guys had your notes and paid attention and really trying to take this very serious. So let's move into our last part of our show, which is my favorite part of the show, which is Traders Talk. For anybody new, Traders Talk is an opportunity for us to really just be, real deal on what trading has to offer, what you can expect if you want to be a trader or participant in the game, that this is very serious business. This is a skill that has been used for, like Tiberius said, for generations, So understand, people have been trading for years, generations ago, and now our people are now, catching on. So I want this information that we acquired, and we want to give it out to you guys, and we want you guys not only just to look at the money and how quickly you can look at that, because that is the result of putting in the work that me and Tiberius do every Tuesday and Thursday. So pretty much, man, what I want to say is, man, knowing what you're looking at and understanding, most importantly, understanding what you're doing is the most key to to all this is about. You have to know pretty much the pieces to the puzzle. All of this is just a puzzle that you're just putting together, pieces together, and you're just understanding it, because once you understand it, things just start to click. in that everything has steps, everything has a process, everything has a steps you have to follow. Like we just explained, like if you want to be a stock trader only, these are some of the things you're going to have to do. You're going to have to know your quick ratios, your earnings per share, your what's the other ones, debt to ratio. Like you have to know some of these things to apply together to know where the market is going, because both of those things go hand in hand. I'm not really too sure how successful you'll be by just doing one side. I'm pretty sure that there's some people that only look at it technical, but with technical you want to know the future of it. So I'm pretty sure that they also look at the news and they read about it. So if they are doing just that, I'm pretty sure they are also reading as well. So I don't think you can do just one without the other. Forex, people are following their strategies. They're having their patterns. They know their head and shoulders. They know their resistance, their supports. They know their higher highs and higher lows. They know what they're looking for. And it's one thing to try to pull it up and learn, but you just have to know what you're looking for. And like we said with Forex, you can make money on both sides. That is why I am more of a Forex participant than a stock, because one, not to say you can't make money both sides with stock, is just with Forex, it's a little bit more, the market is open a little bit longer. It's just a lot more pros that to me than there are to stock. So that I feel like you know, Forex for me, I just think not to say I don't want to do the work. I just feel like there's just a little bit more work that you have to do with stocks. So that's why I just kind of stay on the Forex side. But yeah, guys, just knowing your process and following the steps is the key to all of this, man. And this is a skill that I only not only want to pass to you, but I'm going to be passing this down to generations, to my peoples, to my family. I want my family to eat. So Ty, I know you got something you want to give to the people.
Yeah, just to touch on that and piggyback on that, in terms of knowing your stuff, you have to. In terms of putting the work in, you have to. Because even with Darren, he trades Forex, but he still back tests. He still studies charts. He been breaking down charts every night for who knows how long. So always put in your work, no matter what it is, not just trading. It could be anything in life. If you put in the work that you need to, you have a greater chance of being successful. And I think overall, just as investors and as traders in general, we got to believe in ourselves, because at the end of the day, you are your most important employee. You're the CEO, the worker, everything. You handle all of that. You make the trading decisions. So we got to come to the markets prepared, build ourselves up, make sure we have our work, make sure we cross our T's, dot our I's, and that we have all of our P's and Q's so that we can have the best chance for success. So that's all I want to make sure we do as a trading community. We try and come here every day and drop knowledge on you, whether it's through the Instagram page, through the YouTube page, or on our Twitch page. We try and give you an all around good experience in the market so we can all grow together. So I hope you guys enjoy what we do, because we love it. We appreciate you guys for being here, and it's a great show. We hope to see you tomorrow as well. But Darren, share some things for the people that they need to know.
Man, listen, tomorrow, non-farm payroll, we pulling up 8:10 tomorrow. We do an hour early because we want to make sure we catch the market early. We want to have our levels set up. We want to have our things ready. And we want to be able to lock in and get the best trades tomorrow. We're going to follow our rules. We're going to have our strategies out. We're going to be ready. So with that being said, you already know where you can follow us on my personal IG at I'm the D guy, IMDGUY, or you can hit me up on my business IG, which is at Pearl underscore financial underscore LLC. Hit me with a DM, hit me with a question. I love to hit and interact with the people, man. Ty, man, give them your links. Tell them where they can hit you.
All right, so you guys can find me on both Instagram and on YouTube under the name Ty Trades Futures. And make sure you also check us out on the Bison Trading Show on YouTube under that same name. We're building.
We about stopped
I
and
gotta
started it right
build
quick.
tomorrow. I feel like